Greenland Gambit, markets rebound as Trump softens tariff threats. Welcome back, listeners, to another episode of our deep dive into the stories shaping our world. Today, we're unpacking a geopolitical roller coaster that's had Wall Street and global markets on edge. A saga involving President Donald Trump, the icy territory of Greenland, and a tariff threat that briefly sent shivers through the economy. But as of Wednesday, January 22, 2026, there's a sigh of relief in the air as tensions ease and US stocks are climbing once again. So, let's break down what happened, why it rattled investors, and what this means for the bigger picture. Picture this. Earlier this week, markets were in a tailspin. The reason? President Trump dropped a bombshell threatening tariffs of up to 25% on several European heavyweights, France, Germany, Britain and Denmark. The trigger for this trade war saber-rattling was Europe's firm opposition to Trump's ambitious and frankly eyebrow-raising plan to acquire Greenland, the autonomous Danish territory. Now, if you're wondering why Greenland is suddenly a hot-button issue, it's not just about ice and polar bears. Greenland sits on vast natural resources and holds strategic importance in the Arctic, a region increasingly vital for geopolitics and climate considerations. Trump's insistence on taking over Greenland, something Denmark has repeatedly dismissed as a non-starter, set off alarm bells across the Atlantic. The initial tariff threat was a classic Trump move, bold, disruptive, and aimed at pressurizing allies into bending to his will. Markets, predictably, didn't take kindly to the uncertainty. We saw equities stumble on Tuesday as investors braced for a potential trade war with Europe, a bloc that's no stranger to retaliatory measures. At the World Economic Forum in Davos, European Union chief Ursula von der Leyen didn't mince words, warning that the EU would stand unflinching against any punitive tariffs. The echoes of past trade spats loomed large, with some analysts even drawing parallels to last April's market jitters when Trump floated similar tariff policies, only to partially walk them back later. As David Gressick from Aspirient put it, there was real concern that these foreign policy gambits could erode confidence in US assets. And when confidence wavers, markets tremble. But then, just as quickly as the storm brewed, the winds shifted. On Wednesday, Trump took to the stage at Davos and dialed down the rhetoric. He explicitly stated he won't use force to pursue Greenland, a statement that calmed jittery nerves on Wall Street. More importantly, after a meeting with NATO chief Mark Rutte, Trump announced a framework for a deal over Greenland, and with it, the tariff threat was off the table, for now. The markets responded with enthusiasm. By the close of trading, the S&P 500 had jumped 1.2%, a clear signal that investors were relieved to see the specter of an escalating US-Europe conflict fade, at least temporarily. The dollar also strengthened against the euro and other currencies, reflecting renewed faith in US economic stability. Now let's zoom out for a moment. While the immediate crisis seems averted, analysts like Matt Weller from Forex.com are cautioning that this so-called framework is still just a sketch. We don't yet know if it will lead to any meaningful resolution over Greenland or if it's just a diplomatic placeholder to buy time. Trump, after all, didn't fully abandon his stance. He continued to call Denmark ungrateful for refusing to cede the territory and insisted on immediate negotiations. That lingering uncertainty means markets might not be out of the woods just yet. Geopolitical risks, as we've seen time and again, can resurface with a single tweet or offhand remark. Meanwhile, across the pond, European markets had a mixed reaction. London and Paris eked out small gains, perhaps buoyed by the de-escalation, while Frankfurt dipped slightly, a sign that not everyone is convinced the drama is over. In Asia, the picture was similarly uneven. Tokyo fell, while Hong Kong and Shanghai managed to climb. It's a reminder that global markets are interconnected, and a flare-up in one corner of the world can send ripples everywhere. Let's not forget the individual players in this market dance. On the corporate front, Netflix took a hit, dropping 1.9% despite posting strong earnings. The culprit? Tepid guidance on future growth, which spooked investors looking for blockbuster projections. On the flip side, British luxury brand Burberry saw its shares soar 5% in London thanks to a sales boost driven by recovering demand in China. It's a small but telling sign that consumer confidence in key markets like China can still move the needle even amidst geopolitical noise. Meanwhile, in Paris, food giant Danone wasn't so lucky. Its shares tanked over 8% after a recall of one of its infant milk brands in Singapore. These corporate stories remind us that while big-picture politics grab headlines, day-to-day business realities still shape investor sentiment. So, why does all this matter to you, the listener? Beyond the stock tickers and trade jargon, this Greenland episode is a microcosm of the fragile balance between geopolitics and economics. When leaders play hardball over territory or trade, the fallout isn't just diplomatic, it hits portfolios, jobs and prices at the pump or the grocery store. The relief rally we saw on Wednesday shows how much markets crave stability, but it also underscores their vulnerability to the whims of policy. And let's be real, Trump's track record suggests this isn't the last time we'll hear about Greenland or tariffs. For investors, it's a call to stay vigilant and diversified, because the next curveball could be just around the corner. As we wrap up, I'm curious about where this Greenland saga heads next. Will Trump's framework hold, or are we in for another round of brinksmanship? And how will Europe balance its own interests while keeping transatlantic ties intact? These are the questions I'll be watching, and I hope you'll join me for the next chapter of this unfolding story. Until then, keep your eyes on the markets and your ears tuned to the news. Thanks for listening, and we'll catch you on the next episode.